Yo, Mo here. What's going on, guys? Welcome back to another video. In today's video, we are going to be going over a trade that I took last week. Obviously, you guys know last week has absolutely been crazy. I believe I'm up like around 40 or from last week alone. I'm only risking 0.5%. Yeah, last week has just been beautiful. And it's for the simple fact that if you understand the direction of the market, you can get into some beautiful entries. But I'm going to show you guys the entries that you want to be getting into, and those are obviously the ones with the smaller SL. So how do we differentiate, or how do we make ourselves smaller, or which entry do we know is correct or which isn't, etc. I'm going to show you guys right now. Okay, now before we get started, please drop a like on the video, subscribe. Even if you don't like the video, just make sure you drop a like, because I know you will like the video after watching it all the way through to the end. And yeah, lastly, join the Discord in the description down below if you're interested in joining our free group. And yeah, let's get straight into the video. So how do we decrease our SL? There's multiple ways. I've been through multiple ways, you know, in the normal premium session Zoom calls and also on YouTube. But I'm going to show you and just give you one of the ways, and it's just by being able to pick only the smaller time frame entries. So yeah, I'm going to show you guys a couple of examples here. I'm going to go over EURUSD because that was probably one of the examples. One of the best examples that we had last week. So as you can see right here, EURUSD, we were looking for sells on EURUSD really quickly. We had the last up candle for the down move. That's my institutional candle. Strong move to the downside, breaking structure, and move as well, clearing the liquidity to the left right here. Okay, so we had that liquidity that got cleared, and there we go. So we got the break structure to the downside, and we got one leg created, pull back, another leg created. That's the beautiful setup where we get that internal high liquidity being created right here. That liquidity in order to sponsor the move to the downside right here. That's exactly what we got. And where will we be looking for sells? We will be looking for sells from this institutional candle right here. Okay, and my stop loss would be right above the close. Boom. And where would I be placing my take profit? Probably somewhere around this demand right here. Okay. Now I'm saying probably because EURUSD was not the one that I took. I didn't take the EURUSD trade. In fact, I took the GU trade. So it was like the exact same move. It happened at the exact same time, but instead I took it on GPSD. And there was no reason for that other than the fact that the stop loss kind of here was just smaller. We had a smaller candle, but this move happened on all pairs, like happened on EJ, happened on GJ. So happened on pretty much all the pairs, but I just picked GU right here, just because I tried GU more. Okay, so that's the exact setup that we had right here. So 1 hour 45 minute, and you can see the stop loss is very big, meaning that our risk to reward is simply going to be a 2 to 1. So how do we decrease the stop loss right here in order to increase your risk to reward, in order to potentially have more potential profit if the trade does hit take profit? How do you do that? We can scroll through the different time frames. Okay, we can scroll through the different time frames right here and try to spot the best institutional candle with the smallest body size. Okay, but that still has the engulfing pattern. In this scenario, I would first of all skip this because I want to see the engulfing pattern. Okay, that's not to say that this institutional candle is valid, no, but for me it's a much more high probable institutional candle if we do get a bearish engulfing. Okay, so the next candle I wanted to fully engulf. So the beauty of this is you can go into different multiple time frames, and a lot of the time you're able to find different looking institutional candles, and that way you'll be able to find the best looking institutional candle. Okay, so this is one of the tips that I always give my students: scroll through the different time frames and you'll be able to eventually find a very nice institutional candle. So scrolling through the time frames right here, we can see the same candle from multiple different perspectives. We had a 45 minute time frame, still a big body right here. 1 hour, still a big body. 2 hour, that looks decent. So right there, I could easily bring down my stop loss right here. Straight away, I've increased my trade to a 4.68 risk to reward. Okay, we have that nice wick, no break structure. We had a 3 hour as well. That's a big candle, so I would have stayed away from it. Okay, and the fact that that body right here breaks above here, I would have stayed away from this one either way. I know lastly we had a 4 hour candle, which pretty much lines up exactly as well with the 2 hour one. Okay, the 2 hour one probably being the best one right here in my opinion. Okay, it's the exact same candle though, and yeah, that was a beautiful trade. That's one way of doing it. Or you could also look for lower time frame entries instead. Okay, meaning that you won't be looking at a risk entry meaning that you basically execute the moment it reaches your higher time frame point of interest. You can wait for lower time frame confirmation. Okay, so in this scenario right here, the lower time frame confirmation would have been this move right here. Okay, now 45 minute time frame, and this you're gonna potentially get a tiny bit confused right here. telling me like, okay, we didn't get the break structure right here. With scenario number 1 setups, I don't need break structure. Now, scenario number 1 setups, I don't usually go over on YouTube, and I'm gonna keep it that way. I do believe that I provide enough content on YouTube either way, so gotta keep a few things secret. But anyways, because this is scenario number 1 on the 45-minute time frame, which is where I would have been looking at, 45-minute time frame, okay, I don't need a break structure. All I need is the bearish engulfing candle. But 30-minute time frame, you do have the scenario number 2 just with no break structure, but kind of would have worked in this scenario anyways. Either way, we're playing off of this higher time frame point of interest. As you can see, tapped in, filled in the imbalance right here. Okay, 50% of the imbalance. Take a quick look at that right there. Boom, filled it in and dropped. Got the bearish engulfing candle retracement. Boom, that's the institutional candle. So you would have potentially gotten a lower entry, okay, a lower entry, but you would have gotten a much smaller stop loss, 11 pip stop loss. Now look at the risk to reward right here. My take profit would have been somewhat tiny bit above, I believe. So the risk, where is it? Is it? We said the take profit would be about here. Okay, so that's now we've doubled. Okay, so we've doubled our risk to reward right here. That's an 8.4 to 1 risk to reward right there. Beautiful setup that you could have capitalized on right here. Okay, so that's a potential other way of being able to increase that risk to reward and decrease in your stop loss. And this is more important than ever because the candles these days, okay, because we understand the huge volatility that we have in the market currently due to the conflicts, etc. This is causing like very big candles, and it's also causing massive ranges in the market. So we want to be able to make sure that we get these highest probable but lowest stop loss setups possible. Here's another setup that you could have gone into. So look how it trades from point of interest to point of interest. So we had a point of interest, tap, drop, and then point of interest, tap, drop, but we create another point of interest. So you can see the secondary and tertiary candle being created. So here was another one that you could have capitalized on. And this works for re-entries as well. So you could stack these levels and just be placing your stop losses above the highs to protect it, which is very possible. So like the first entry here, and then protect it above the high. Okay, second entry here, protect it above the high, and then third entry here, protect it above the high. Okay, so that could easily be done. We talked about stacking levels on last Tuesday's Zoom call. Okay, and how to stack entries as best way as possible. Another one that you could have potentially gotten into. I had to pause that video there very quickly, had to sneeze. But anyways, so then as I said, the third entry right here, which would have given you a 12.1 risk to reward. So you can see sometimes we might not get our entry at our desired level up here, but as long as we have that higher time frame point of interest confirmation that it rejected, now we can take a look at lower time frame entries and decreasing our stop losses. This is why a lot of people, they love the lower time frame entries, because first and foremost, you can get a re-entry. If you miss the first entry, you can also get a smaller stop loss, meaning that your risk to reward is much higher, meaning that you're going to be making more money, right? Last confirmation. Okay, so we had a couple of confirmations right here from the order for footprint chart. As you can see, I've upgraded to the NTA version, which is much better in my opinion. Not plenty of confirmations right here. So like one of them would have been, we're trading right around the VWAP. That's not much something that I would really look at. Here would probably been one of my stronger confirmations, that we the fact that we have the exhaustion. So we have the single print at the top right here, and after that we see the selling imbalances come into play. Okay, so that was one of them right here for me. And as well as that, right at the top, okay, we see our stopping volume. So we had a stopping volume right here. That was another confirmation for me right after that high that sellers were coming in strong. And we also could see multiple selling imbalances. Other than that though, there was nothing, there was not much else for me that was of concern. Yeah, there was pretty much no other confirmations for me right here, which is fine. You're not always going to get perfect confirmations from an order flow perspective, but it is one of those things that we definitely do use in conjunction with our price action, and it has helped us immensely. Okay, so that's pretty much it, guys, for this video. Kept it short, sweet, and simple for you guys in order to be able to yeah, basically make more money on the trades that you're entering, you know, just by making sure that you decrease those stop losses. But yeah, with that being said, hopefully you guys enjoyed. Once again, make sure to drop a like on the video, subscribe as well for more content. You're going to be seeing a lot from me. I'm going to be dropping some crazy videos as well upcoming, in like the life of a trader and all that stuff. So yeah, it's going to be crazy. But yeah, with that being said, hopefully everyone enjoyed the video, and I'll catch you guys on the next video. Have a great day. Bye bye.